Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company here at Master Investor. If you're new to our community, ensure to subscribe to our channel. Turn on the notifications so that you know when we go live or upload a valuable talk that can literally change our finances forever. As long as we apply the information, right? That's how we turn anyone's knowledge into our personal knowledge. It's by applying and executing that information into our life so that we can get the results and we can improve and we can experience what the person or the mentor experienced as well. And hopefully we execute according to whatever they're teaching us. That way we avoid mistakes that are unnecessary and we can manifest ourselves into our destination quicker. You know, it's about the journey. It's about every single step of the way, but we want to also reach that destination. We want to experience cash flow right now. We want to experience financial freedom. We want to get to the wealth status now. And that means that we have control over our time. We don't have to work for money. We don't have to worry about paying for the bills because we have business and investments that are paying for our bills. And we talked about that extensively in the last video where we explained that the foundation of true wealth is reading financial statements and improving them, and starting with our personal financial statements. So what do we have to do in order to create wealth is focus on improving our financial statement, and specifically the asset column. We all have an asset column, we have a liability column, we have an income column, an expense column, right? And we have to figure out how we're going to acquire our first asset that produces passive income and capital gains income sometimes, right? Because not all assets will create passive income. The two types of income that we can get from investing are passive income and capital gains income. Passive income is taxed at the lowest bracket, then capital gains income. Sometimes, in certain instances, we can minimize taxes with capital gains income by rolling the gains into a new asset that is bigger and by meeting certain requirements, okay, according to the law. So if we're talking about real estate, when we sell a real estate property, those gains need to be rolled over into a bigger asset, to a bigger real estate property within a certain amount of time so that we can defer taxes and we don't have to pay taxes on those gains. However, if we decide to keep those gains and use it for whatever we want to use it for a vacation, then we have to pay taxes on that, which is higher than paying taxes on passive income. That's why rule number one in our community here at Master Investor is that we focus on building passive income and multiplying money through sound investing. Because passive income is what truly creates true wealth, because wealth is measured in time, not just with money. A lot of people have money, but they don't have true wealth. True wealth is having freedom, being able to do whatever we want, whenever we want, with whoever we want, because we have control over our time and we don't make money through a job. We make money through investing, specifically by controlling assets that are producing passive income. And we are active investors, okay, which means that we are involved in putting together the asset and incorporating the company and launching the business and raising the capital and bringing the team together and making the phone call to the broker, okay? Having a team of people searching for assets and going to banks and raising the capital through debt, right? Having the right loans in place so that we can create tax-free wealth is basically what we're doing, because the bigger our debt is, the less taxes we'll pay. And because money is created with debt, and we talk about it all the time, we have to look back in history. We have to understand that on August 15, 1971, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, fake money, paper money, and just an idea backed up by confidence. So, meaning that money is created with debt. That's why debt is tax-free. So today, as long as we have confidence behind what we're doing, money will find us. And how do we get that confidence? It's by showing the financial statements to whoever is going to give us the money. In this occasion will be the bank if we're talking about real estate property. All of these big skyscrapers here are controlled with debt. Some bank has provided a loan to build this building right here. Let's say $400 million to build this. Okay, and it looks good on the books of a bank because since there are people here living, paying rent every single month, it's paying for the loan, the mortgage, right? And it's also creating more wealth for the bank and the one that's controlling this, the entrepreneur, because the bank cannot do it directly. It needs somebody like us in between this and the loan. It cannot be done directly because this is a capitalist country. Okay, so the banks need a middle person, if you will, which is a financial investor, to control these assets right here. Okay, these are cash cows. Okay, so these are controlled with debt, good debt. So, and it's tax free because the more debt we use, the less taxes we pay. All debt is tax free. Okay, that's what the law says because money is created with debt. So we don't pay taxes on debt. So you know when you hear people talk about get out of debt, that sounds like a lack of financial education because if you truly want to become wealthy, you need to understand how to manage debt because we're going to use good debt and bad debt to build wealth. Okay, it's a combination of both because we're going to have liabilities in our lives. We're going to have things that we want to enjoy, such as a car. Maybe it's not bringing money, it's just that we like to drive it. Maybe a beautiful Rolls-Royce Phantom, right? But that Rolls-Royce, depending on who you are, can bring money. For example, in my situation, it brings money because more clients come to us by the simple reason that we have a Rolls-Royce, right? So it depends on who you are, but if it's just a liability that is something that you enjoy for the luxury of it, right? It's something that is nice to be using as an experience, but it's not bringing in money, then what we do, we focus on creating an asset first with good debt that will take care of that liability. So that way, we don't have to ever worry about working to pay for that liability. The asset is going to pay for that. And we use other people's money, OPM, we use the bank's money to create or acquire that asset that now is paying for that liability, right? A car or whatever it may be, maybe, you know, a piece of clothing that we want or whatever. And now that asset is paying for that liability. So at the end of the day, we're using OPM, other people's money, we're using, which is going to be tax-free, right? Because debt is tax-free automatically. And then we're building passive income because the business or the investment which we acquired using that loan is going to, or is bringing already passive income. So it's going to bring passive income. We want to improve that asset. Hopefully we will implement our strategies to improve the bottom line of the asset. So we may think of ways that we can do different in the way the business is being managed. Maybe the current owner is forgetting to do something or is not doing something that we would do in order to improve the bottom line. Okay, so once that is coming in, that cash flow is coming in, that passive income is coming in, it's tax-free, and it came from the loan that we acquired. All we did was show that, hey, this has been making money for the past 10 years. The bank likes it. It can see the tax returns. It understands it's an asset. It looks good for them. So what happens is that they have a CAMO score, which is basically a credit score for the banks. And the more assets that they have on their portfolio that brings in cash flow, meaning that it makes them money, then the Federal Reserve Banks allows the bank institution to print more money. So the ratio might be for every $1 that you have in your vault, then you can print or you can lend $10. You can create basically money from thin air to lend to the customers in different packages with interest, so that the bank can make money by lending money. They're also making money from thin air ultimately. That's why we can do it legally too, because they can do it and the government does it as well. Okay, so think like a bank and think like the government. Become partners with the government because we are following the law. We are doing exactly what the government wants us to do. And when we do that, then we become partners because the government and the law tells us that they want to improve the economy. And the only way to do that is by investing, by having financial investors. So the laws and the tax code is a package of incentives for wealthy entrepreneurs and inside investors or master investors, because we are the ones that create the jobs. We are the ones that get the economy booming. We are the ones that solve problems in the marketplace. And so we get tax breaks, if you will. I don't call them tax breaks. Those are incentives, tax advantages, I should say. That's a better word, because anybody has access to them. It's not like we're getting breaks. It's not that. It's that we're following the law and we're doing what the government wants us to do. The government wants us to invest in the economy, specifically in food and technology, right? And anything that's going to improve the country and the economy itself. And if it's something for humankind, even better, right? It can improve every single country in the world, right? Like an Apple phone. When they created the Apple phone, people around the world are using the Apple phone. So now it's not just something in America. Other people are using it as well. So it improves people's lives, Same thing with a drink like Coca-Cola or like any other drink, like water, like a good water. It doesn't have to be the bad drinks, right? But, these are good brands that refreshes people. For example, like Coca-Cola refreshes people. People like to drink Coca-Cola. It's bad. People don't understand that Coca-Cola can harm you, right? If you drink it too much, it can really cause damage to you. And in other countries, I heard that Coca-Cola has been classified as a cleaning supply because people use it to get the rust of metal and things like that. So, but the point is that it's a true brand because it's solving problems in the world and people are buying it everywhere. And nobody knows who the owner of Coca-Cola is unless you research it, and nobody cares. But people understand what Coca-Cola is. And so we want to build brands, and we want to start building something that we can pass down generations. So don't build something that's just for us or just for you, right? Because otherwise it's just a hobby. It has to be for everybody else. It has to be for other people. What's the niche? Figure out what's the passion that you have, that you want to solve a problem. Find a need in the marketplace and solve it fill it in with something that has a solution with it, right? Has a product attached with it. And sometimes we don't have to create the product ourselves. We can innovate from somebody else's creation. So we can use less resources, we can create something better, or we can acquire a product that is already built for us, okay? So don't be afraid of using delegation and using other people's skills. Remember, we want to use other people's money, OPT, legally, using loans, debt, learning how to raise capital, which that's going to be our fourth ebook, which we'll be releasing pretty soon. Stay tuned, because the job number one of a wealthy entrepreneur is to raise capital, and the number one skill is to sell without selling, using systems in a smart market.